Hey everybody, Mike Fairborn here, sitting in for Mr. Kevin Horner. It's great to be here with you today for our Getting Started with Stock Investing. And everybody, I want to talk today about maybe some of the income side of stock investing. Really, there are three key components. You've got growth, you've got value, you've got income. Today, I want to focus on the income aspects and maybe taking a look at a think script that will give us a perspective as to where a company's dividend yields have been over a period of time. Are they overvalued relative to where they have been previously, or are they fairly priced or even undervalued? And you can get some really interesting info from that. So I'll look forward to going through that with you all today. And hello to you, Dragon Rider. We've got Brian, Dragon Rider. We've got David, Joe, and Jay Richardson. Welcome to all of you. Good to be here. I love this aspect of looking at getting started with stock investing. There's so many cool things you can look at amongst those three key categories. And we'll do that today. Joining the chat by a good friend of mine, colleague Connie Hill. Please, let us know if there's any questions that you might have. We'd love to address those for you. And yes, hello to you, Will and Tatiana. All right, everybody, let's get started here with some disclosures. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security. Now, Schwab does not recommend the use of technical analysis as sole means of investment research. We are going to be using the Paper Money software application, and that is for educational purposes only. Investing does involve risks, not just risk, risks including the loss of principal. Past performance is no guarantee of future results or success. Okay, and there is no guarantee that the execution of a stop order will be at or near the stop price. There's some additional information there. We're really going to be looking at really some of the income aspects of investing today, though. So let's do this. We're going to turn that over and do a very, very brief look at the markets here as we get going. And I don't know if many of you might not be familiar with what is basically the Dividend Aristocrats list that we have available now. That is a weekly chart. I don't need that. In fact, let's go ahead and just look at the SPX real quick. And I wanted to highlight where we're at right now. Still appears that there might be some resistance along this 5650 level. I've labeled this a couple weeks ago. And it is right around here, as you can see, 5660, that is. And we're still just kind of bouncing around it. We'll see if we get up above that level. That could be bullish if we get up there. That's the question. Or it could be bearish if, in fact, we start to roll over. And that would be a negative. If, in fact, that happens. It's an interesting point in time to look at for any stock investing going over, extended periods of time. The one thing I did want to say, and I did state this yesterday in my markets and sectors class, is the following. If you get a move down like this, and maybe you've taken out, some recent support levels and made some recent lows, like you can see over here, and then, of course, this longer-term level just below it. If you make some lows here, okay, and you're coming up like this, sometimes that's referred to as a bear flag pattern. It's kind of like a flag, but upside down. That's the bull flag. This is the bear flag. And sometimes, if you find resistance at the top of that bear flag, you can get going lower. I think that's really one of the main concerns that investors are looking at in the market. And what might that foretell to a big picture move in the market? I talked a lot about that actually yesterday in the class, if you want to check that out, in markets and sectors. But we're going to be talking about something different here today. And what we're going to talk about specifically is, let's minimize some of this information, and we're going to pull this up right here and just take you down into an area I think many of you probably are familiar with. It is the 25-plus year dividend group of companies that have increased dividends for 25 years plus, at least 25 years, each and every year. There's also a 50-year. This is referred to as the Aristocrats. This is referred to as the Dividend Kings. Let's click on it right there. And we'll open it up, and then you can see it. And you might recognize a lot of these names. Let me take out this volume indication thing here for just a second while we permanently as we take a look at it. But this is what we've got in this group. And today, as I mentioned earlier, if you're just joining us, great to have you here. But I did want to take a look at some of the income aspects of investing. Traders out there, investors are looking for specifically Well, in dividend paying stocks, and a lot of times they'll gravitate towards these groups of companies that have had a 25 plus year history of not keeping dividends the same, definitely not cutting them, but raising them each and every year through good times, folks, and through bad times. So if you think about it through recessionary periods and through strong market conditions, market growth, they have been able to raise in all those conditions. And you'll see some of the names over here. You'll recognize them. You got Abbott Labs, you got AbbVie, AFL, you got A.O. Smith, you got plenty more down here. Coca-Cola, Clorox, Colgate, Palmolive. You got Johnson and Johnson, Walmart, on down the line. You'll notice that some might stand out to you. Procter and Gamble. So many of these are maybe some of the consumer staples. Although you are getting McDonald's. Is that a consumer staple for some people? I think it might be. McDonald's. We've got one in my neck of the woods, and well, there's always. It's kind of like another place called In-N-Out Burger, but it's just like, there's just a lot of people that are always in the drive-thru. It's just, I think it's a staple. That's all I'm saying. It's a staple. Target's in here. You got SJM. SJM, is that Smuckers? Okay. Yeah, the jam's in there too. The interesting thing here is they do have those dividends. You can see the dividends here right on the chart. Do you see that right there? You got them. Now, any one of these companies, hey, we just ended up here on Smuckers. That's fine. Let's go ahead and just show you, though, what that looks like, because every one of these in here, you can go back at least 25 years, and you will see those dividends increase what I'm about to show you right here. In fact, I think I just found it. Yeah, right there. So there you have it. You see this right here, folks? You got this, the dividend increase was, right here, 106 to 108. Now, you say, gosh, Mike, that's not huge. And you're right, it's not huge. But for 25 years, it's gone up. And we can see that with any company. We can go back and take a look at those. As far back as these these corporate actions would show us, where we can view them. And I think they go back, many of them, 10, 15 years, where we can actually check the dividend increases. But that's what I'm talking about. Actually, in the very far end over here, too, if you look close, 102 to 106, there's a dividend increase. Now, did it help the price of the stock? No, but it did help the yield of the stock. Where can we find the dividend yield? On the chart, just very simply by itself, up top right there. Go to the trade tab, and you can drop this down right there, and you can see it right there. About 4%, 3.95% is what you'd see right there. Okay. Now, I have over here, I think I have, let me just try this real quick. I'm going to open this up, and I'm just trying to remember, I do have this yield display, which is really kind of cool. I mean, if you just want to have the yield in the upper left-hand corner, you can click on that yield display. That's what the yield display is. It's just simply just post the yield so that you don't have to open up the trade tab. Okay, this is a ThinkScript, and ThinkScripts are not guaranteed for timeliness or accuracy. And I can share that with you, but as long as the data that's coming into the platform is correct, the yield display will be correct as well. There you have it. 3.95. Is that helpful? You guys like those little short additions? Let me do this. I'll share that so you all have it. And then yeah. Let's just put it over here. Oh, sorry. That's where you share it. There's share. And I'll put it into the chat box. Let me just type this in here. So, scripts not guaranteed. I have to put this in just because, yeah, it's the truth, Accuracy. But here is that script. This is the first one. I've got a couple to share with you today. The next one is quite a bit further out in time, and Connie actually sent that through too. Thank you so much, Connie. You got a couple of notes there in the chat, but at the end there is the script. It's just a short, straightforward one. You can see that, I mean, the data's coming through, and it came up correct. It shows it according to what we're seeing in Thinkorswim. But anytime you're looking at dividend-paying stocks, that can be helpful. By the way, you know what, over here too, let's right-click in this upper column up top here and just plug in the dividend yield as well. Why not? Why not have it? You got two choices. You got yield or dividend yield. I think it's the exact same number, but whatever, we'll just choose yield, and there you have it. Smucker, there it is, 3.95%. All right, so guys see that? All right, that gets us started with the dividend yield. This is an annual number. The yield itself is an annual number, and what it tells you is that an investment that you make, let's say if you invested in this company, whatever number of shares it's equivalent to, but just a quick reminder, refresher here on the dividend yield. If I were to invest, let's just say $1,000 into Smuckers at this price right now, okay? Because that's what's making this yield relevant. It's a little bit higher. It went up just slightly, 3.96, but you'll notice that when prices move, so too does the yield. If I invest $1,000 hypothetically into Smuckers right now at this price, well, what happens? What happens? I could get a 3.96% yield at the end of the year. Now, a quick note as we're talking at dividends and dividends aristocrats and any company that pays dividends, dividends are not guaranteed to be paid out to. Dividends can be cut. The whole idea here, though, was, folks, is that they might look at some of these companies that have a long history, which you can tap into now on the Thinkorswim platform. They have a long history, and that can give investors confidence that they might be able to continue to pay that dividend. There's no guarantee of that, but the history suggests that, gosh, they've been able to do over 25 years, good times and bad, and that's raising it each and every year. But there's not a guarantee. I want to make that point clear that that dividend will continue, but they look at companies that have a 25 plus year history or a 50 plus year history, both of which you have access to right here on the Thinkorswim site. Okay, platform, I should say, Thinkorswim platform. Now, having said all that, did that make sense? So if you put $1,000 in here over an annual time frame at the amount that we purchased the stock for right here, that $1,000 will generate, according to the current dividend yield, which is an annual reference, going back annually and looking at those prices, what we're looking at there. Now, quick point. Let me ask you all this. What happens over time? What if, just hypothetically, the price of this stock does nothing for 10 years? It just flatlines. But each and every year, Smuckers, or whoever it is we're looking at, is able to increase annual dividend payments, like we saw over here, to $1.02 to $1.06, $1.06 to $1.08. They're able to do that, and I'm just going to throw out a number. It's not the same number, believe me. It's way off, but let's just say, hypothetically, I'm just showing you where you can see it added, but let's just say they can grow it by 3%, which is not uncommon at all for companies to do that, and the price of the stock goes flat. Question, does our dividend yield go up? Our yield, what's referred to as our yield to cost, what we paid for the stock here relative to where the price of the stock is at. That's the question. Does the yield go up or not? Think about it, the same price, okay? What if that yield, so right now, the yield itself, I'm not going to erase these. I'm just going to go back over here. I'm going to throw out, as an example, I think maybe you already have answered or have a solid understanding of this, but just in case, if we're looking at these, let's say, for example, it's $1.08, right? So it's $1.08 right now in payments, and okay, so we'll put it down here. So $1.08 is a quarterly payment. This company pays dividends 4 times a year, each quarter, so times 4. So it's $4.32 they're paying out in dividends annually. If I divide that number by the share price, which is 109 roughly, it's 3.96 right there. You can see where we're getting that 3.96 at. So that helps answer our question, doesn't it? If the dividend yield, the dividend payments increase 3% even into next year, okay, maybe let's just say it's we're making $4, and I'm just averaging it out. It's not 3%, but let's say it goes up from 4.32 to 4.50, which is more than the number I just came up with. But let's just say it goes higher. We're getting a higher payout because they were able to raise the dividend. We don't know if they're going to be able to do that. They've had a history of doing it. investors anticipate that it will increase. My point is to this whole thing, because you probably want to hear my point at this case, at this juncture, but if the price stays the same, but they keep paying out higher more dividend payments, the yield goes up. It goes up. My favorite case to highlight here is Coca-Cola. And, it's been stated Warren Buffett, who's owned this for a long, long time. I always wondered why he wouldn't sell his Coca-Cola. It's been estimated that his yield to cost long term, here's your monthly chart. That goes back a few years. And by the way, Coca-Cola's gone higher too in price. But his yield to cost every year, this is what he's getting in dividends. This is an average. This is an estimate. It's not 5%, it's 52% return from dividends. And why is that? Well, he was buying this decades ago. And Coca-Cola has been raising their dividend year over year over year over year. That can help investors if that continues to rise, not to mention the price of the stock has gone up too, right? I mean, it's still more than doubled. I mean, here's $25 and here's 50. We've gone up, we haven't gone up to 100 or anything, but we've had a good run in share price too. But I'm just saying a 52% return annually. I mean, he's making in 2 years, he's making back his entire total investment in less than 2 years, actually. And I guess it'd be like 104%. That's based on the estimates that are made. Some will say it's higher than that. But that's the impact of a yield to cost when you get that dividend increasing year over year over year. Not to mention, maybe the performance of the stock does well too. And that's a capital gain. That's not income, but that could be considered a total return as well. So hopefully that provides some insight as to why traders might look for these long-term payers with an anticipation that would continue. Again, over here on the left-hand side, you can come right down here and look under the public folder, and you can find those up top. There's your 25-plus year payers. There are your 50-year payers right there as well. Dividend aristocrats up top, dividend kings as well. By the way, one of the requirements to be a dividend aristocrat, you don't have this requirement with the 50-year. But the 25 years, the aristocrat, you have to be listed on the S&P 500 as well. You look at the dividend kings, there's a company out there called, I'm sure many of us heard, Tootsie Roll. Tootsie Roll is a dividend king. Now they make more than just Tootsie Rolls, but I think that's maybe one of the things they sell still. But it's not on the S&P 500. Just as an interesting distinction. I was kind of surprised when I saw that. Didn't even know Tootsie Roll had a stock. Okay, so that's kind of some background we've got for you here. Okay, now I wanted to talk about that yield specifically. Now, by the way, Coca-Cola's yield, pulled it up right there, just under 3%. A lot of traders, investors will look, they have a tendency to find a dividend yield at about, they'd like to look at it 2.5% to 3% or higher, generally, in that range. That's generally a number that might historically match inflation, although we've seen inflation be significantly higher over the last few years. That's a historical read on inflation, and they'd like to just generally get it in that range. Maybe to potentially offset inflationary pressure. I'm not exactly sure, but I've read a lot about the 2.5% to 3% as they're looking for dividend yields themselves. All right, let's just clear that off, and we're going to take it a little bit a step further here today. And awesome, Connie's got us all caught up here. Let's take a look. Yes, they were. David, yeah, those were recently added. So this is not, you guys are coming in at a good time if you're seeing this for the first time, because this is fairly recent. This hadn't been here for the longest time, the aristocrats. So there you go. Good to see you as well, Mike, as well as all of you joining us here. Okay, all right, let's do this. I want to talk today about taking it maybe a step further and getting a sense of where, I'm going to clear these off for now, where the dividend yield might be over a period of time, where it's at relative to where it has been in the past. And to do that, what we're going to do is we're going to pull up a script that I have adapted to this. There was an original one that was built by a prior coach, but this is one that I've added a few different details to, where I can put a moving average on that yield, and I'll show you how that works right now. In fact, let's just add this in. I did already. Okay, don't need two of them. There's one. That's plenty. So that is. Oh, and I've got black. You can hardly see it. You can change these two, but I've got black on the black background. All right, everybody. I'm just going to do a quick switch just to show you, because many of you do use this as a backdrop, but this is another Think script that I built. Let me just come up here. I'm just going to change this so you can see these lines, and then it will be a little bit more clear to you what I'm trying to show you here. But here's the, just right there. So I turned it into white. Sorry, that's blinded everybody, but there is a black line up here representing the top 20% of where the yield it's like the high end of the yield, and the bottom 20% down here. I'm going to switch back to the black, but I have those here. Today was really just a reference. I wanted to reference a moving average on it and say, hey, on average, it's below where the yield has been. Okay, so let's go back to our black. That's right. I should have made those like green or something that would work on black or white, but here we go. Let's go back to the dark. Easier on the eyes. Okay. Okay, so what you're seeing, and you can still kind of see those black lines through here, but what we've developed here is a historical yield. The historical yield itself is where has that yield been over an extended period of time. In fact, if you come over here and you take a look at it, this is so that sort of cyan line, that light blue line right there that I'm just kind of drawing, not the green moving average, but this line represents where that yield has been over the last 2 years. So I've got 2 years of data here. Now you'll notice something interesting, and the reason why I bring this up is because historically, when Coca-Cola, when Coca-Cola breaks into or gets very close to a yield of 3.5, it's been noted that it can be more attractive to some dividend investors that like to pick up on it. That's like an eye catcher to them, because sometimes that's when also, that yield is high and they like to buy it, because just like that explanation I told you about buying long term, as Warren Buffett had done, like with Coca-Cola, and held it for long periods of time. One of the keys that some, dividend investors like to focus in on in terms of their purchase is trying to buy when the price of the stock really takes a nosedive right there. When it takes a big nosedive, that's when they're really, really interested in it. Because that's when the dividend yield is the highest. And they think this is their conjecture. This is what they believe, is that over time, the dividend yield is going to keep rising. That's what they might believe, right? Because it's had a history of doing so. And they also think that it might be a good price for the stock. What you find, though, is when you hit these big numbers, sometimes that's exactly where the stock bounces. A great case in point, I've got to show you guys this. This is fascinating. ABT, Abbott Labs. Okay, and by the way, I have the current yield for this script showing right there in the bottom right-hand corner. Okay, so it's 1.76%. It's below the 2%, and you can see the price of the stock did jump up a little bit. Let me show you this short term, because we got something here to show as well on Abbott, but I've got to show you this long term in just a second too as a reference point. Look over here with me. Where's the last time we kind of spiked over here? It was right in there. Now you'll notice we had another spike right there too, right in the same general area. Where does Abbott Labs have a tendency to reach the high end of the dividend yield, right? Because here's the scale over here. Here's really effectively the y-axis of the dividend yield. Low down here, high up here, high yield, low yield, Look over here with me. Very, very close to the same area. Okay. We're right at it's when it gets above about 2%. Yeah, when it gets above two, but I would actually say more specifically, let me point to it right there. It's just in the teens. It's about a little over 2.10%, 2.1%. Anytime it's basically greater than 2%, it might become interesting to investors here. As you can see, let's highlight this point. Did it bottom down through here when it got above that level? Prices bottom. Sometimes you might get an overwhelming group of income-minded investors that say, this is my time to get into this aristocrat. Because I think that they might continue to pay that dividend into the future. And by doing so, by still paying that dividend into the future, I think that it might also potentially be a good price to own it too, because it might be low in price. That yield script right there is showing you that. Again, the yield scripts aren't, or any scripts here, or think scripts are not guaranteed for time of issue. Actually, but they will mathematically, spit out the number as long as the data coming in is correct. So they're trying to capture it when it might be of interest. Now, notice, did the dividend yield increase over here? It did. And you know how we know that? Because look at this. We came close to the same range, but we're higher in price. Does that make sense? Does that make sense? It does. Even though it's a higher price, the dividend payouts increased. And so back to that same formula where we're looking at annual dividend payments relative to share price, it's still relatively close to 2%. And you'll continue to get that. In other words, if they keep raising the dividend, you can get 2%, above 2% at higher and higher and higher levels over time, as long as that dividend keeps increasing. Okay, because it's relative to price, that yield. But, hey, you can have higher prices in the same dividend yield as long as more dividend payments are being made. And that's exactly what we're seeing here. Okay. Now, before we go long term, which I'm going to do, I want to show you one last thing, and that's this. I put this moving average in here. It's a 50-period moving average. You see it here. When the yield is below the 50-period moving average, that can be construed as maybe an undervalued yield. You still want to use these reference points over here long term, but that still just gives you a sense, hey, you are undervalued. If you start to break out, well, that could also be an area to kind of keep an eye on, perhaps, as you're watching that, because prices are probably actually, dipping at that point in time. If we reverse this on its head and I show you this, you see how prices right there, I should say the yield broke that moving average. You know when the yield really starts to spike? Look at that right there. Oh, interesting. That could be right towards possibly also a bottom if you had a number of income-minded investors picking up shares down here while the yield was above that historical range. It's on a high range, right? A high range for what you got over here. You got that right on. This think script will help you with that. Okay. But notice when it crosses, it's just it's like it's inverted, right? It's actually the yield's dropping, but that could also be a sign that prices are increasing because the dividend yield's not being, or the dividend payments are not being cut. All right. Any questions on this? Yes. Yeah. Long separate. Yeah. The dividend, the definition of the yield, price goes down when the yield goes up if dividend remains constant. Yeah, or increases, right? Yeah, you can get that increasing. And we're talking about those that have a history of increasing those dividends. So you got that little element in there as well, which is really interesting. In fact, I want to back out and just show you really long-term perspective on this. Ooh, let's even go a little further. Is that 20 years? I think it is 20 already. It's 15. 20 should do the trick, and it will. Okay, so I'm going to use Abbott Labs and show you guys something. I don't have the yield script on here, but that's okay. I'm just going to highlight this for you. Okay, you see this dip down here? Do you remember this time frame? This was the sort of the mortgage crisis. This is 2008 to 2009, and that was the low there. Now, the company continued to raise the dividends through here. I think Abbott Labs, don't quote me on this, but I think they're right at 50 to 51 years of raising the dividend each and every year on a consecutive basis, not missing a single year. But when prices came down to this level here, I've gone back and I've calculated this. The yield itself was about 8.5% on a dividend aristocrat at the time, for sure. It was over 25 years. 8.5%. Now, if there was an expectation of that yield increasing into the future, how has this stock done from that period of time? Well, it's not done too bad price-wise. What is my yield? What is my yield? It was right there. Like I said, a lot of times investors are looking to buy when you really take a big hit in the market because the expectation is that this company will turn around. That's the expectation. They think it's a bigger company. They've been around the block. They're going to have new products, whatever the case might be. They think that it can go up higher because they have dividends. They've shown the ability to pay dividends in good times and in bad, and that's a fundamental characteristic as well, right? That they have money that they can send off to the shareholders as well. That's a sign of, some fundamental strength there. If it means you're growing and you still have money to fund the dividend and support the business is the way a lot of traders like to look at that, investors. So if I'm down here and I've got 8.5% and the price has gone up, folks, what has happened over this whole time frame? It's still on our aristocrat list. It's still, I believe it would still be a dividend king. But what's going on here? Is the dividend going up or down? It's a dividend aristocrat. We know that they don't cut it. Or they haven't cut it thus far. To be on the list, okay? They can't get. So every year through here, they're raising the dividend. So what's my yield? You say, gosh, yeah, not only did I buy down here, there was a capital gain if I'm holding the whole time, but also that 8.5% could be substantially higher. Let's say if the company, which some companies will do, between 3 and 5%, they'll raise the dividend each and every year, could be substantially higher, where we're at over here. So even though the prices run up a lot, because they paid that dividend on our yield to cost. Our cost, we're just doing hypothetically, whoever bought it down here around 20, they've been making it this whole time. Do you see how being an investor can be helpful over time with a company that continues to grow the dividend? There could be more than that too. If they grow the dividend, obviously, it could be a sign of strong fundamentals too. But this is not just like the case in point of what's always going to happen. This stock just happened to go up, and I was just highlighting this. In fact, I would say this too. If they'd still raised the dividend by the same amount, but the stock price was over here somewhere at 50, not 100, near 150 or so, is that yield still increasing? Yeah, the yield's still increasing as long as they're raising those dividends. Capital gains wise, looking at something totally different, it's not as high as it would be up here. So whatever we're looking at, but I'm just saying these are sort of, characteristics that an income-minded investor would be looking at. And sometimes too, recognizing how much they're growing that dividend yield on a year-to-year basis can be helpful, obviously, in terms of what ultimate yield you're going to get over here. Okay, in time, whether it be here or here, it's just, that yield percent can be higher based on your yield to cost, based upon how much they're increasing the dividends each and every year. Okay, yeah, let us know if there's any questions you've got in there. It looks like Connie's all got us caught up, but yeah, let's go ahead and I just need to do one thing here. Let me oh, I don't have it on this one. Let's go back here. There we go. This is our yield. I want to share this with you so you have it. And let's get that going. 1 second. Let me pull this up. I'm just going to put a little note in here on it, and I'll share it with you guys. But yeah, so what do you think? There's 3 key components that we talked about. There's the income investing side, there's growth, and there's value. And there's no reason why you couldn't take all of these three categories and still combine it. You can still look for growth investing, right? For example, there are just in general, some traders will look for aspects of both of those, growth and income, growth and value. I've seen value and income, value stocks, where the company's undervalued, right? It's cheaper here, and they're saying the fair value of this company is up higher, like it's higher in price. And so they're waiting for the company to be fairly valued over time. And guess what? They're paying dividends and they've had a history of raising those dividends. Again, not a guarantee they'll continue to do so, but maybe it's something that they feel has a history of raising the dividend, and they're saying I can potentially they might come up with this conclusion is that I can wait building up my dividends on a company that I think is at least still stable but undervalued, and then it can reach fair value over time while my dividends hypothetically would keep growing too. So that's how income and value can come in together. But you can also have like the trifecta. I mean, there's no reason why you can't have all three: growth, value, and income. So you can use a script like this on any of those. Let me see if I can just get this going here. Uh, One second. Sorry, there was a portion of it that got erased, and I was just going to change the color as well before I share it with you, so it's not black down here. Because many of you might have a black background and you can't see the upper 20% or the lower 20%. And so let me just do that real quick. But in the meantime, throw us in some questions so we could try to answer those for you. Okay. And one little quick note, and we're good down here as well. And okay. I'm just going to verify that that's going to be green. I teach a ThinkScript class where we talk about a number of different scripts on Fridays if you are, if anybody's interested, that is. This is going to be really stand out, though. We'll just go straight green on both of these here. And we'll be done. Okay. Okay, that should do it. There we go. So I've got green down here. That's a lot of green, isn't it? You can change the colors, and I can show you how to do that in ThinkScript class if you are, in fact, interested in it. Again, a quick note, too, over here on the right-hand side. You can click on the wheel, and then you can change what that moving average is. Like currently, and you can change the overbought and oversold areas as well. Like I've got 20% for the greens, up or down. And I've also added this in here for the moving average, and that's our 50 moving average. What I could do is I could put a different color on here where you could change the color of the moving average as well. Geez, I could just knock myself out if I wanted to, right? Have it. I mean, that would be kind of nice, though. Maybe I can do that. If you guys are interested, I can cover that tomorrow in the ThinkScript class. I might have it updated for you. If you are interested, that is. You got to be interested. All right, folks, if you find this class useful, you like this kind of content, do me a favor and smash that like button. I'd really appreciate it. Also, hit the subscribe button down below. Connie, I don't think that we had a survey today, so we're in the clear there. Let me post that in for you guys. Oh, there it is. You know what? Let's just post that in as well. I'm going to make sure that I get those disclosures that Connie and I had typed in earlier just on the ThinkScript. We want to make sure that you guys know it's not guaranteed for timeliness or accuracy. But hey, if the data is coming in and it's good, then you can get that data, which is nice too. If it then the ThinkScript should do exactly what it's supposed to do. But yeah, it's not guaranteed. All right, so there you go. And let me do this as well. My gosh, when you start sharing scripts, it does expand the amount of discussion that you go through. But we've got time. So one last thing I wanted to do to make sure that everybody gets that. Let's just go over here. So this was the people that are viewing this presentation in the archive section. I'll just say this is the historical yield. And I did update that. Yield, put that right here. Oh, yeah, they're not guaranteed times actually as well, but I think we've covered that. Just put this in here too. Ah, sorry. There's that. And we also discussed the yield display. And that is going to be right over here at the very top. I'll just get that because people don't get the chat when we are they're viewing it in the archive session. So you just want to copy those in and you've got it. Again, not guaranteed for timeliness or accuracy, but just want to show it on the screen. Okay, very good. So with that, everybody, I hope you found this informative, useful. Again, smash that like button. It's nice being here with you all today. And be sure to follow Connie and I on X. Connie's got some great stuff on there. Connie Hill, let's see. Connie Hill is just Connie Hill CS. Mine is Mike Fairborn CS. Be sure to be aware of imposters out there too. It's got to be spelled the exact same way. Otherwise, it will be somebody different, very likely. All right, everybody, have a terrific rest of the day. It was nice being with you. Bye bye.